So how reassuring do you think this two-day bounce is?
Look, I mean, I think that the key thing that investors have been really concerned about is that there's been a huge upward shift in the multiples that the market has been paying for cloud-based software companies or SaaS companies over the course of the last 24 months, or really since the pandemic hit. And so I think that this market going into 2022 is really going to continue to be a market of the haves and the have-nots. Who are the players who are going to be able to continue to sustain the momentum that they saw throughout the pandemic?
So the have-nots, is that just a list of the companies that have issued relatively weak guidance in the last 3 weeks?
Well, I think this is probably among the more exciting times that I've ever seen in investing in software, because there's so much change. I mean, if you rewind back 12 months ago, Zoom was at the top of the leaderboard and they were growing revenues at 1,000%. Now, as we're coming out of the pandemic, knock on wood, what we're seeing is some of those businesses are starting to see a deceleration, while others are seeing the inverse of that. And I think that the difference between what Coupa's seeing and what Mongo's seeing just today is a microcosm of that.
Eddie, you also like China. You think it's investable, down quite a bit this year. But how do you factor in not only just the general environment attitudes toward China, the diplomatic boycott that could signal further international, perhaps, isolation, and just it's difficult to know what China might regulate next and really affect stocks. We saw it with Didi. We saw it with educational software.
Yeah, I mean, 2021 has been the most treacherous year to be investing in the Chinese internet and media sectors, or really in China more broadly, over the course of the 20 years that I've been doing this. There's been a huge shift in policy on the government's part, effectively putting regulations across a number of sectors, as you just mentioned. Our strategy has been to focus on what are the government's priorities in terms of taking back some power into the state-owned enterprises, and really trying to start to stimulate what they call common prosperity, where the capitalism of the last 20 years has resulted in this kind of bifurcation of incomes and wealth across the economy. And you've seen just a lot of these private internet and media companies grow to be very large businesses, creating some wealthy multi-billionaire founders. And so where we've been focused on is looking at the places where we think that the companies are either going to be beneficiaries or at least it's going to be neutral, some of the regulatory change. But the last thing I'll say on this is, at the end of the day, the Chinese government is over the long term keenly focused on continuing to drive economic growth. And so while there is a tectonic shift, if you will, at the end of the day, they're going to need to create an environment where foreign investors are going to feel comfortable and safe investing there if they're going to be able to perpetuate the type of growth that them and their population is expecting.